Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going into our weekly numbers of our portfolio. This will be for week 29 as of February 8th, 2025, which is Saturday. It's today. And we're going to go through our weekly numbers as we always do. So first we get to our portfolio's net worth. We're at $396.01. Again, that's as of today, February 8th, 2025. Pardon me, early as always when I do this. I don't know why I froze it right there. Anyway, so week 29. This is the weekly chart from February 3rd to February 8th. We have no net cash flow, so no cash deposit this week. We have a money-weighted rate of return of 0.33%. We have a market gain or market loss of 7 cents, down 7 cents. We have a dividend earned of 12 cents. And you can see we had this big pop here in the market from February 5th to the 7th. Came up and then came down. A lot of volatility the last couple weeks and going into this week as well. So we have our portfolio monthly data for week 29. This is from January 8th, 2025 to February 8th, 2025. We have net cash flow of $63.16, so that's two $30 deposits. The first one you could barely see at the lower left here of the chart is where the first $30 deposit was. And here's the second $30 deposit. Whenever you see these large spike ups, that's new cash coming into the portfolio and getting invested. So this is the second one. So total together is $60 and an extra $3.16 from extra cash. It's going to be one of those mornings, I apologize. Getting over cold, I think, maybe. We have our money-weighted rate of return of 3.31%. We have a market gain of negative 21.74. That's with our volatility in this week. And we still have the dividend of the 12 cents over that time period. So again, this is our monthly data for week 29 from January 8th to February 8th. Now our quarterly data for week 29. This is from November 8th, 2024 to February 8th, 2025. We have net cash flow of $123.88. So you're going to see four spikes up on the chart. That's for each $30 deposit. So 1, 2, 3, 4. And the extra $3 and 88 cents is extra cash. We have a money weighted rate of return for that time period of 3.97%. We have a market gain of $12.86, and we have a dividend earned of 24 cents. So it's our quarterly data from November 8th, 2024 to February 8th, 2025. And now, as of this year, I've been adding the all-time data. So we get to see from the portfolio's inception with our first $100 deposit right here back on July 21st, 2024 to current date, February 8th, 2025. Each of these little spike ups is those little $30 deposits every 3 weeks. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 30 is 270. Plus the original $100 makes it $370 for the net cash flow. And the extra $4.33 is for extra cash and dividends. Over that time period from July 2024 to February 2025, we have a money-weighted rate of return of 10.22%. Pardon me. We have a market gain of $21.68. And we have a dividend earned of $1.40. So this is the all-time data from portfolio inception till today. From July 21st, 2024, when I first started making these videos on week 1, we are now week 29, which is February 8th, 2025. All right, so this is our progress so far. Now we have our percentages. So we have our weekly percentages for week 29. This is from, I already forgot my dates, February 3rd to February 8th of this month, February 3rd to February 8th. So we have our target allocations. Gold still at 30% with our GLD ETF. We have commodities at 20% with our USCI ETF. We have US dollar at 20% with our UUP ETF. We have stocks at 15% with our RSP ETF. We have government bonds at 10% with our GOVT ETF. And we have Bitcoin at 5% with our IBIT ETF. So the most recent change was the USCI increasing from 15% to 20%, and bonds decreasing from 15% to 10%. So we took 5% away from bonds and we added it to our commodities position. So half of my portfolio is effectively invested in inflation, commodities, and gold, right? Because I don't think inflation is going away. That's been my thesis for a little while now. I'm by no means a market expert. I'm just looking at what's happening. So far it's been doing okay. So, weekly gains. Again, from February 3rd to February 8th. So gold up 2.07% for the week for a gain of $2.48. That's nice for gold. Commodities up 0.41% for a market gain of 32 cents. US dollar down 0.27% for a market loss of 21 cents. Stocks down 5.56% for a market loss of 33 cents. Government bonds up 0.36% for a market gain of 14 cents. I'm stuttering today. And Bitcoin down 5.59% for a market loss of $1.09. What the fuck, Bitcoin? Now, portfolio monthly return from January 8th to February 8th, week 29. Gold up a staggering 7.89% for a market gain of $8.57. Gold is like tapping on the door of $2,900 right now, which means it's right around the corner from $3,000. $3,000 an ounce, so a little fucking coin in your hand, an ounce. It's crazy. Gold's not going anywhere. Commodities up 2.86% for a market gain of $1.81. Not bad. US dollar down 0.23% for a market loss of 17 cents. I think some momentum's coming out of the dollar. Stocks down 2.52%. I'm sorry. Stocks up 2.52% for a market gain of $1.38. Government bonds up 1.39% for a market gain of 65 cents. And Bitcoin down 0.77% for a market loss of 14 cents. So Bitcoin not having a few good weeks or months. You know, it's really tapping on that $100,000 price range, and it keeps hitting it, come back down. So quarterly data is from November 8th to February 8th. Gold, most of its gains has been recently in the past month, but up 7.22% for a market gain of $7. Commodities up 7.53% for a market gain of $3.74. Really good gain for commodities. Again, this is inflation right here. This is inflation. US dollar down 0.63% for a market loss of 39 cents. Stocks down 1.36% for a market loss of 66 cents. Government bonds down 0.28% for a market loss of 13 cents. And Bitcoin only now up 23.53% for a market gain of $3.02. I remember when this was like 70% or over the quarter, you know, because it was going into election season. Now it's the momentum is just dying. And then we have our all-time data for week 29. So this is from July 21st, the portfolio's inception date, till February 8th today. Keep in mind that I've changed these allocations a few times. You're going to see that on the next slide. So it's not going to directly represent our performance in the portfolio, but just to give you an idea of what these individual ETFs have done over that time. So since portfolio inception, gold is up 19.14% for a market gain of $12.65. Commodities are up 14.30% for a market gain of $4.77. US dollar up 0.59% for a market gain of 25 cents. That ain't shit. But it's a dollar. It's not supposed to be volatile anyway. At least you don't want it to be. Stocks up 2.63% for a market gain of 82 cents. Government bonds down 1.74% for a market gain of, market loss of 76 cents. And then Bitcoin up 63.12% for a market gain of $5.91. So there's where like that's as close to like the max return it's had pretty much over that time period, like 70-ish%. So we have our position changes. So this is from inception till today. Anytime I've made a change, I've moved money in around. I usually do with like 5% little increments. So our most recent one down here, January 27, 2025, I reduced my government bonds position, as I said earlier in this video, by 5%. And I moved that money over to commodities, which increased it by 5%. So every date you see, I've made a change in the portfolio by moving money around in it. So all my assets are always going to have something invested in it. If I take money out of one thing, it goes into something else. Such a bad habit. Anyway, so this was the most recent one. You can look at this. You can go back and you can see the changes in all the previous weekly updates. We've had no portfolio transactions this week. So now to Illuvium staking for week 29. We currently have 7.14 IOV staked for a current market value of $149.04. Current IOV price is $20.88. This is very low. A lot of coins have been selling off. This is a dashboard. We have our vesting. So all of our vests, you can see we have 2 pages now because the way they break them up. So we have going all the way back to July 27th, 2024 was our very first stake, and it will unlock in 169 days. That's this 1.32 IOV. And each stake after that is $40 once a month into the staking protocol. And the most recent one done on January 25th, 2025 of this year, which will unlock in 350 days, has a long way to go, of 1.22 IOV staked in it. So this is our Illuvium investing. So we're getting passive revenue generation from gamers. Anytime a gamer buys like a skin or something in the game or whatever, it goes into a pot, and that pot gets distributed to all the stakers, so I get my tiny little cut of that. So I'm basically profiting off of gamers, which is fun. Of course, as a gamer myself, like, I'm cool with it. So we have our Illuvium revenue distribution for week 29. No new revenue this week, so we're at 0. And so far since July of last year, we've had 3 payments equaling 0.024 IOV, which has a current market value of 50 cents. Remember, the coin's at $20 a token right now, so that's why we're down to 50 cents. And we have no Illuvium transactions this week. So those are our weekly numbers. Now the fun stuff, get into the charts. So gold. Gold's not fucking stopping. I don't know why people aren't talking more about gold. It's fucking baffling to me. And I mean that with all seriousness. Gold has just been in this crazy uptrend since October 2023. I think because gold's not a stock. You know, it doesn't make anything. It's not doing anything. It's just gold. It's a rock. You know, it's a fucking piece of metal. But I'm like, at the end of the day, it's been around for thousands of years and it's always had value. But look at this thing. Since October of 2023, just in this uptrend. It came out twice. You know, popped above a little bit too, but it came down twice. But it's overall stayed in this uptrend since October of 2023. Why the fuck would you not own gold? And that trend can reverse at any point in time. But it ain't right now. Like I said, we're tapping on the door of 2,900 right now. Let's see what's at. 2860, right? Gold's at 2860. Almost at 2,900. That's for 1 ounce, right? It's a little ounce. It's like if you put like a coin in your hand, you know, just like, and it's like it weighs an ounce, just a little ounce in your hand. Almost $3,000. $3,000. It's crazy. Anyway, we've had gold at 30% since the beginning of this portfolio. It has been absolutely our best trade in this portfolio. Even with Bitcoin's higher percentage returns, Bitcoin's chart does not look like this. And we will show you Bitcoin's chart momentarily because you've seen it before multiple times. It had 6 to 7 months of consolidation downwards. This has had consistent consolidation upwards, right? Bounces around, gets out of its range, consolidates, bounces around, gets out of its range, consolidates, right? But it keeps going up and to the right. We have no reason to sell gold. Gold is dominating. US dollar. Another fucking fun one. So of course we have the EX dividend date for this ETF. So people bought in and sold off. Let me show the actual DXY chart just so you know what it looks like. So this is what the dollar does look like right now, what it is doing. So there's this big run up going to election October, November, and we're kind of losing some momentum right now. It's kind of coming down. Go back to my ETF. So kind of going sideways right now. I don't know if it'll reclaim this green trend because of this ETF dividend right here. Otherwise, it would be above this trend line if that were the case, if it never had to sell off. But right now, the dollar's kind of going sideways. We have the previous dividend distribution from last year, or from, I guess 2 years ago now. It's basically hit this peak, and then it just hasn't reclaimed it yet. So, I'm saying what the dollar's going to do right now. Still volatile. I still have it at 20%. In my opinion, when the markets are volatile, something like the dollar is better off. Even if you don't get good returns or whatever, it can just kind of help maintain what you have in your portfolio, plus or minus a little bit, and just kind of side skirt some volatility. So that's kind of what I'm trying to do. I'm not fully bullish on the market yet, but I am bullish on inflation. It's been doing very well. Like I said, look at gold. Like, can you deny this? Absolutely not. No, you cannot. This is a fucking great trend. All right, anyway, dollar. So still watching it. It hasn't broken to the point where like it's going to go down like this right here as an example. This is from June 2024 to August 2024, like a downtrend like this. This dividend EX date really fucked me up, but that's fine. I'm still 20% in it. Now, commodities. Oh my fucking god, commodities. We got to go all the way back in time. We really would go back in time. It's just, look at this fucking trend. From March of 2020, it's just, right? Like if I were to just put a big ass arrow on this. If I can find that arrow. Fuck is that arrow? Arrow marker, arrow, here we go. There you go. There's your commodities trend right there. From April of 2020 all the way to today, basically, just crushing it, right? This is commodities right here for like fucking 5 years, basically. But recently though, it broke out of this trend. It went higher. Which surprised me. But anyway, I put this trend after this craziness, whatever, it got more consolidated right here, which is for me easier to track. So I look back to July of 22 of this ETF USCI. It's broken out a couple times, but it's like it's consolidated over on this trend. But it really broke out right here, which is concerning because I think there's going to be like a pullback. But then again, if my thesis is correct, you know, or I should say continues to be right, at the very least, inflation is not going away. This ETF has been an absolute monster with capitalizing on inflation. So it's been doing very good. So we have it at 20%. I don't know if I go beyond 20%, but if I really think it's going to keep getting worse like this, then I might increase this to like 25, and then maybe pull from. I don't know if I want to go lower than 10% in bonds, but maybe pull from like the dollar, pull 5% from the dollar and put it in here, so it's a 25% position. But inflation. People don't like inflation unless you own it. Then you love it because inflation keeps going up. Like you see me buying this gold ETF for you know, how many dollars do I have in this gold ETF right now? So I have $122 out of that. So out of that 396, pardon me, I have $122 of gold, right? So I don't buy like a fucking brick of gold, you know, craziness. I'm using ETFs, you know, to like get like as my proxy to own the asset or the underlying asset, or at least track the price of the underlying asset. Right, so I have $122 of gold, and it's just doing fucking phenomenal. The $122 is doing fucking great, right? Same thing with commodities; it's doing great, going up this whole time. So you don't need to own the $3,000 ounce of gold. There's other ways. I've even seen online with something I'm getting kind of interested in is gold backs, which are these like paper notes basically that are made with gold. Like there's so many ways to own gold. You might pay a little premium on it or something like that, but like you're owning a long-term asset, and it can fucking look like this. You know, going back to October, just up and to the right. Whatever gold you own is just up and to the right. It's fucking great. Stocks. Here we go. Stocks. So equal weight, RSP. Had this kind of trend here, and it kind of broke a little bit sideways. So I kind of readjusted the trend to kind of try to capture which way it's going. So I'm consolidating it. It wasn't up and like these green lines were going to keep going anymore. It kind of just started going this way because there's this big sell-off right here that kind of fucked me up. Remember, this is the equal weight. if we look at our S&P index, you know, you see the difference, right? So this is the S&P going back to November 22 of 2022, apologies. And it's been up and to the right. There's this big drawdown here. It's back in October, coincidentally, when gold took off. But it reclaimed its trend and it's kept going. You know, so remember the S&P 500 index is concentrated in just a few stocks like Apple, Nvidia, Amazon, you know, like big name stocks. It's consolidated in it. You know, like 20 to 30%, I believe, of the S&P 500 index is just in like the top 10 names. You know, it's not equally diversified. I want equally diversified because I have all kinds of different assets. I got gold, I got dollars, I got commodities, I got stocks, I got bonds, I got Bitcoin. So I have different things in it. But if I go back to November of 22, let's see, right about, make it look right about there, we'll say November 22. It's been kind of going up and to the right. Not as good as the S&P 500 index for sure, but like, give you an example. So ETF.com/SPY, we'll say. So this is ETF.com is a free site. You can look at breakdowns of ETFs. I'm just going to go to the holdings. So I don't know how often this gets adjusted, but this is insane right now if this is true. So of the S&P 500, which right here says number of holdings, this SPY ETF, right? I'm using the RSP ETF. The SPY is like the biggest ETF out there. Like everybody knows about that one. But of the 504 holdings, like the S&P 500, 52% says top weighting is in the top 10. I don't even know how that's possible. That makes no sense to me. But if you look at just the numbers, Apple, 6.84%. Another Apple, 6.8%. Oh, they're doubling up on Apple. Nvidia, 6.12%. Microsoft, 6%. Another Microsoft, 5.98%. They're doubling up on Microsoft. Nvidia, another Nvidia. What the fuck? They're doubling up on these things. Is this real? Like, are they really like doubling up on these? This is crazy. Normally, I haven't seen it like this before. Normally, it's just one line item per stock. But I don't know. Maybe they're doubling up on these things because it's crazy. But you see, Meta, there's 3%, 2%. There's so much concentration, basically. So if this is true, there's 50%. And like I said, I don't know how often this gets updated, but it's highly concentrated in just a few stocks. So now let's look at the equal weight, the what I use of the S&P 500. So 505, it's got one extra one in there. The top 10 weighting is a mere 2.57%. 2.57%. So they overblew the SPY ETF with all the extra shit. But the top 10 weighting is 2.57. So it's like the very first one, which is Palantir, 0.31% in the top weighting. Constellation Energy, 0.27%. Tapestry, 0.27%. Broadcom, 0.26%. Jabil, 0.25%. GE Aerospace, 0.25%. You see what I'm saying? These are the top 10, technically. But look how little allocation they are of 500, right? Of 500, right? So this is the equal weight S&P 500. I want to equally distribute it. I don't want to put all my money in a small concentration of stocks. I want actual diversification across an index. So that's why I'm using the RSP. But like when you look at the SPY, right, or the S&P 500, but the SPY will mirror it. Like I can add on SPY. Just add that. You see that? See this? Was it reddish line, pinkish line? See how well it syncs up? Look how well it syncs up with this. Look how well it syncs up. I'll even make this look like a line too, make it easy for everyone to understand. Line, there you go. So you got the blue and the red. Look how tight that correlation is. Look how tight that correlation. You can barely see the red. You can barely see the red. Look how tight that correlation is. Yeah, you can go back 5-year chart. Look how tight that correlation is. You can barely see the red, right? So this is a highly concentrated index, right? But watch what happens if I add the RSP. Watch this shit. Watch this shit. See that purple line? You can see the purple line a lot more. Look how it's broken out here. It's broken out here. It's broken out here. Way broken out here. This is where it really started diverging, right? We do a 1 year. Look at the blue and red. They're so tightly correlated you can barely see the difference. Look at blue, red. See that? Blue, red. Look at that. But look at the purple. Just it's correlated, right? You can tell there's like correlation, but it deviates so far, right? So my equal weight index that I'm using is not highly concentrated in these big names. Now you can make the argument that it's better to be concentrated in it because you get more profit. But I would argue you also get more downside because you put so much into these few names. If they take a hit, your fucking index is taking a hit hard, right? So I prefer the equal weight. That's just my preference. Anyway, a little sidetrack there, but that's fine. So equal weight, put back on my, how the fuck you say that? How you can she? I don't know how to fucking say that. I like the equal weight. Keeping at 15% for right now. I don't know if I go to 20. I feel like if inflation reverses, if we start losing out on inflation, which means gold's going to go down, which means commodities are going to go down, maybe then I might think about stocks. Maybe that'll be a reversal, but as of right now, I think stocks at 15% is good enough. All right, government bonds. The thing I hate more than anything else in the world, government bonds. So there was this, I always got to show this because, just how horrible bonds are. So going back to the beginning of the pandemic, it's funny because you look at this on bonds, and you look at USCI, the inverse. Right? If you ever need to understand the difference between bonds and commodities, there you go. Inverse of one another. Look at that. Commodities up over the past 5 years, bonds down over the past 5 years. Right? Cannot be more obvious than that, right? Bonds and inflation. Right? This is what they are, right? This is why I make dumb decisions on bonds, because even though I acknowledge inflation, I'm trying to utilize every asset in the portfolio to the best I can, but not like I have to have everything at maxed out. But like bonds have to be at a certain position. I'm thinking 10% for right now. But if it reverses, like I said, if inflation starts going down, there's a good chance that bonds might start going up, right? So I'll flip. So if I'm at 10% bonds right now, and I'm at 20% commodities, then I would flip and I go maybe 20% bonds and 10% commodities. That's if inflation is truly going down. Like if it's truly going down, the trend has reversed and it's going down, then I can go into bonds. And you also see the correlation with the interest rate as well. But so this is bonds right now. Kind of hitting this bottoming right here. It looks like it's starting to come back up, but still just so far down. I hate bonds. I've been wrong on bonds so much. Just so fucking much. I hate bonds with a passion. But the government does have control over the short end of the curve. So like the 2-year yield, because like if you look at the 2-year yield and the Fed funds rate, they're like pretty tightly correlated. But then when you get out to the long end of the curve, like 10-year, 20-year, 30-year, then it gets more crazy. But bonds have not been doing good. So I'm keeping it at 10%. I don't really need to say much more about that. I fucking hate bonds. Bitcoin, right? So this I was talking about earlier. We had our pump when the spot Bitcoin ETFs got approved in the beginning of 2024, and this from March 2024 till pretty much September 2024, just downward consolidation. This is why I said gold is a better chart. Gold is a much better chart. Look at gold. People want to talk about big gains in Bitcoin. I'm like, by all means, go ahead. But my fucking portfolio has been up and to the right in my gold allocation. Just fucking beautiful, right? Bitcoin, what the fuck is this? Look at this right there. This is horrible right here. This is horrible, right? Going into the election, funny enough, look what happened. It turned around. And then it really popped right around election day. This is like right here, right around election. Like just went boop. Right, so it's clear who Bitcoin likes in that fucking race. If we go to our watch list, we'll see Bitcoin, teetering around this $100,000 number, right around here, right around this area. It's bounced up above it, came down, hit it, came down, bounced up above it, came down. And it's as of right now, and this could always change. It syncs up pretty well with this long-term trend line. So we have the 2017 peak, right here. We have the beginning of the 2021 peak, and then it crashed 50%, and then it went up towards the end of 2021 again to hit a second peak, and then crashed, and it came all the way down to December 2022, Bitcoin's darkest days in that time period, and then it just began its ascension back up again, and now it's hitting this peak again. So I don't know what this line even means, right? But it just syncs up so well with all these prior peaks. I don't know if Bitcoin's going to bust above this and keep going, or it's going to keep tapping at this line, at this $100,000 range and then crash. We're going to see what happens. But as of right now, Bitcoin, I always keep it at 5% because of that volatility. It's just so insane. Imagine if you started seeing like the long-term, like the views of my portfolio, like the quarterlies and everything like that. Like this all time, like imagine if you see these quarterlies and you start seeing like these crazy negative numbers. Like I've had times where like the numbers are low, and on the shorter duration, like week or month, it has been negative. Or over the long term, I'm trying to keep things positive. I'm trying to allocate properly. And if I put everything to Bitcoin, I might have a bigger jump, right? In these some of these charts, but I'm also gonna have negative. Some of these long charts says when it goes down and it corrects, and that's going to be a huge hit. So Bitcoin's highly volatile, that's why I keep it at 5%. So I keep saying it over and over, but I just want to anybody new coming in to ask why not more percent or whatever. It's because volatility. But anyway, that is our weekly update. As always, every week. Next week should be week 30, so 30 weeks in. So doing good. So hope to see you on the next one, and have a good day.